issue the invoice, and then it's due in a certain time frame. So maybe you want to send out payments only to those that have not yet sent you payment and it's overdue now. So if you gave them 30 days to pay you and it's past 30 days, maybe you just send the statements out for them. So that could quite be the case, quite possibly. So now we're going to say the date range. I'm going to start at 11/30 and go to the current date. Typically, you're going to go to the current date, which we're going to imagine here is 12/30/23. Down below, if there were customers that don't have an email, then they would be over here. You can't send them a statement by email if they don't have an email, right? You'd have to actually print out the statements, which you might be able to do and mail it. But clearly, you would like, if you're sending out invoices, to have the email address so you could send it out by email. So these are the statements available. We have the 17. You can see we have the recipient's name, we've got their email address, and we've got the balance outstanding down below. We can cancel, we can print preview, we can save and send. That's what we're going to do when we're done with the whole thing, or save and close. And I want to say print preview. Let's check them out. So then we have our statements that have been created. So we have our name up top. We have the statement format. And then here you can see this is the balance forward. So this is the amount that was due to us prior to the date that we started, the starting point date. And then this is the current activity that has happened between the date that we're looking at, which is basically December. So this is the December activity, an invoice, a payment, and a payment. So you have the running balance on the right-hand side, which gives them a little bit of detail of the activity that is happening, and it gives us the balance still due, $239. It also gives this little report down below for the outstanding balance that breaks it out by current due, 1 to 30 days past due. So it gives them this past due amount here to once again, and it also gives a nice little bottom line. In the settings, I think you can turn this off if you don't want this bit down below, but I don't see why you wouldn't want it. It's pretty useful because it gives kind of like the bottom line down below and a little bit more information of saying, hey, look, it's past due. If we go through it, it gives a statement. Here's the next one that we just go to all of them. Here's the balance forward, no activity in the current time period, and it's been past due. And then we have the next one. Here's the balance forward, the payment happened, and then another invoice happened. And so this one actually got paid off. Notice it's showing the detail. There's the balance. It was paid off. And then here's the new invoice. It's showing the activity that happened in the current time frame. And there's the balance. Here's the next one. Just has a balance forward of 1 to 30 days past due, 31 to 60 days past due, and so on. So that's probably the default one that most people would use, and hopefully we can email that out and make our follow-up process on the accounts receivable cycle easier. Let's look at the other two options though. You've got the open items. So these are open items for the last 365 days. So now open items are going to, and let's apply it, are going to be, you would think, the invoices, right, that haven't been paid, that are open. So let's check that out. Let's preview that one. And we then have, now it's showing the detail of the invoice for the last 365 days. So there we have that. And so here's the invoice of the open item. And open item, here's the invoice. It gives you the detail of the invoice. This one has two of them, right? So now we have the two items here, and it still gives you the amount due down below, because this was the amount, open amount is 81 and 4, and it gives you the amount due down below. So a little bit different of the statement, so but it might be a little bit less information. So if you have really long statements, possibly that might be useful, but it's only going, it's 365 days back. And then the last one, transaction statement. So this will give you the transactions that have happened, and possibly you might have customers that want the transaction statement maybe even if it wasn't an invoice, even if it was a cash-based system maybe, and you have your transaction statement that a particular customer may want, for example. Let's preview that one. And so we can see here, we've got the transaction. Here's the invoice total amount, and then it gives you the total that received. And notice we're not looking here at the amount at past due. It doesn't give you that past due amount right down below because it's just looking at the activity that has happened. It's not trying to report necessarily on the outstanding balance per se, like is normally the case for statements here. Now we're just showing the activity that has happened. So here's the invoice, the amount received total, and then here's another invoice for this one. This one we invoiced, and let's see if we have one. Let's increase the range on this one just to see more activity. Let's go from 010123 to 1230, apply it, and now we'll see more range on this one. So now if they wanted the transactions for the year, we had an invoice, we had a credit memo, we had an invoice, total amount, and total received. And then here we had an invoice, so that was the activity, total amount, and then total received, gives you the amount and the received. And then we had here invoice, 3 invoice, and then the amount received on those invoices. So it gives you kind of the detail. It's not giving you still the outstanding balance or the amount that's due over a certain time. But again, if someone wants the activity that has happened over a range, then this would be a nice report for that idea. But again, usually you would think that the reports would mainly be used that you set up in an accrual system, possibly using the first balance forward report, so that you can set up a system that you follow up on the invoices, being able to not just send out the invoice again as a reminder, but give a statement which will allow you to combine multiple invoices into one statement, hopefully allowing you to not bother your clients too much with too many emails and be able to pay you the full amount that's due, rather than having 2 invoices where they might catch one and then not get the other one or something like that, and being able to then do this on a systematic process to make it part of basically your accounting cycle a lot more efficiently is the general idea.